In the big interview of the day, Neal Froneman, the chief executive of Sibanye Stillwater. Neal, I'll have you know that we had at the BizNews conference an address by Rob Hersov. Now, Rob is quite a controversial guy. He says things the way he sees them, and he certainly never, ever holds back. And he asked me before the conference if I had any names that I could give him about outspoken South African CEOs who want to find a way of just explaining to the government that they need to do things differently. Apart from Neal Froneman, he said. I couldn't find any other names, and neither could he. So you have quite a reputation.
Yeah, Alec, of course I can be politically correct, but being politically correct has not taken the country anywhere in the right direction. Of course, I understand what advocacy is, and yes, we can use it. But it just creates confusing messages. I think the only way to be clear is to be blunt and try and explain in the national interest what is wrong. Rob does that extremely well. I've given up on trying to be politically correct. I see business continues to try and do that, to try and prop up a government that seems just hell-bent on not changing. They don't seem to see a crisis, and we continue just to move in the wrong direction all the time. It really is very disappointing and concerning.
Yeah, the lack of urgency that one gets from the situation South Africa's in. But I guess there is an election in 2024, and at our conference again, those who were talking were saying, look, just pick a side, but get involved, do something about it rather than sitting on the fence.
Absolutely. And I think that the current government has a short period of time to indicate that it is willing to change, although I don't believe it can change. And I certainly think that as much as difficult as it is, we actually have to vote for other parties. We've got to make coalitions work. I know that they haven't worked now, but then I have to ask business, what has business done, or any civil society done to actually assist in helping parties make coalitions work, or getting other parties together? Because until that happens, it's almost a waste of time to vote for the ANC. Until they can demonstrate that they are willing to let's say, let go of the state intervention type approaches. It's pointless to continue doing the same thing and expecting, the ANC to change. They've either got to demonstrate they're going to change, or we need to look for other solutions.
Now, it's really interesting that you are prepared to speak out like this, because if we go back to Sibanye, the beginning of Sibanye, it's almost 10 years now. It feels like it's flown for the investment community. For you, though, I'm sure it's been a very interesting 10 years since Goldfields Limited split off its South African mines apart from South Deep that it didn't want. And then you were the guy who picked them up and have created a business that today, that original business, if my analysis is correct, is only about 10% of what Sibanye Stillwater is today.
That is absolutely correct. And Alec, we did it by when we inherited these assets, or were given the responsibility of managing them, we stood back and we looked at the good, the bad, and the ugly. And that's my message to the government. Look at the good. There is good. Look at the bad, and look at the ugly and acknowledge it. Because until you acknowledge it, and that's how we ran our company, we acknowledged what was good, we kept it. We found out was what was bad, and we fixed it. And the ugly, we just stopped. And until you do that self assessment, you won't move forward. You know, until you acknowledge there's a problem, like being an alcoholic. Until you say I've got a drinking problem, you don't start fixing it. And again, I think running business and running government is not too different.
It's a heck of a turnaround, though, that the South African government, or South Africa Inc., has got ahead of it. Rob Hersov was saying it's going to take many years, but at least let's get started now. What do you think the runway is, or the period is, that to start making a difference in South Africa? Let's just say that a coalition government were to come in more business friendly, more job creative.
Yeah, it's a tough task. And I approach it from, we've got to reduce poverty, we've got to reduce inequality, and it really starts with unemployment. There are too many unemployed people, and we have to create employment. Now, I don't believe government can do in a significant manner, and therefore they have to embrace business, not in this sort of, well, you sort of half acceptable. They've got to create the environment, make it easy for legal businesses to operate. They've got to stamp out crime. They've got to stamp out corruption, because that rot filters through our businesses, through our cultures. We end up with, organizations where rule following and adhering to policies and procedures often gets questioned because of what happens at let's call it leadership levels, where and I'm not just pointing fingers at government now. I'm saying that all leaders in South Africa need to display the right behaviors, the right values, and anyone that's been involved in a change management situation knows that it takes many years to change behaviors. Technically, to do the right things is not too difficult, but we have developed a very bad culture in South Africa, in my view, that is going to take many years to turn it around and create a winning nation.
Well, we always have to start somewhere, and just for interest, what you're talking about now, and indeed what Rob Hersov was addressing, in a very similar vein, has touched a very raw nerve in South Africa. Within, I think it's 18 hours, more than 60,000 people have watched that Hersov recording of the Hersov presentation at BizNews conference. So quite amazing. Just looking at Sibanye itself, in those 10 years, Neal, you started off with assets that nobody else, well, certainly Goldfields didn't want. How are they doing now? Do they still, and those are real venerable old gold mines, Driefontein, Kloof, Beatrix, names that will be well known through investors throughout the world. Are they still producing gold?
Yes, absolutely, Alec. And they still have about 10 years of life. Obviously, Beatrix a bit shorter, maybe 4 to 5 years on let's say, current horizons. Kloof has in excess of 10 years, and Driefontein, amazingly, still 7 to 8 years. We probably get negative value, and I know that sounds crazy. How do you get negative value for assets you own? But of course, when analysts model you, they actually include liabilities, environmental liabilities, closure liabilities, and of course they run it into a negative NPV model. So that's why I say we in some cases we see negative NPVs for those assets. Yet you just take something like the recent strike we've had, and what that has done to our EBITDA without having 3 months of gold production, and you realize those assets actually still generate significant amount of earnings, as assets. But the point you made right at the beginning of this conversation, it's only about 10% of our earnings. Um, but they are, in their own right, they are still valuable assets. I would imagine at current gold prices, anything between 20 and 30 billion rand of value. They have huge optionality because they are marginal. They're not, they're not assets like our PGM assets. But we employ 30,000 people at our gold business, and if we can keep it profitable to, even if it's only slightly profitable, we are delivering into not just shareholder value, but also into societal value. And you'll hear me, I'm sure, through this conversation, talk a lot about shared value and what it means, across the board, not just to shareholders. You've got to think much broader than just shareholders these days.
The scenario within which those gold mines are operating now, and we can talk about the strike, which does appear as though labor relations are now starting to get very tricky. But before we go there, inflation appears to be back. Now, you and I both got enough gray hairs to remember what it was like in an inflationary environment. And
Yeah.
usually that's good for gold. Usually that is when marginal gold mines do better. Marginal meaning that the cost of production very close to what the current gold price is. So as the gold price goes up, the value of those assets rises because their margins grow exponentially. Are you seeing any repeats here or anything that you can draw on from history?
No, well, I remember those environments, Alec, that you talk about. I think what we are seeing that is counteracting that, the benefit of inflation that we used to see is rising interest rates, because there's a global problem on regarding inflation, and with rising interest rates, investing in gold is sometimes not the best investment. People would rather put their money into the bond markets and so on. Having said that, I still, like many of our gold shareholders and gold investors, still believe that gold is a safe haven. Um, I'm not quite on the page that it's going to billions of dollars per ounce either, but I do think where you see global economic turmoil, like we're seeing at the moment, good place to be and have investments in is gold. But what is happening with the current inflationary environment? It's eroding margins rather than getting that gearing as a marginal producer. We haven't quite seen that yet. What I do think we should watch out for, though, is obviously a weakening rand, because a strong dollar and a move from commodities into bonds and so on, you will see the emerging market exchange rates drop off, and of course then we get some very nice gearing from a rand gold price point of view.
Neil, to go into the production, that strike, which continued for months, and also now that AMCU, who were your sparring partner, are now getting together with NUM, who is the bigger trade union, and together they seem to be operating in concert against you. Does this present any warning flags into the future?
Alec, no. I don't think it raises warning flags. I think it raises um, a change in dynamics, where those two unions competed for membership in a very aggressive way, and of course there were benefits to industry being able to get a settlement quicker with one, and then use that as leverage on the other. But what it actually shows you is that unions are becoming, I don't want to say Well, let me say it. I think they're becoming less relevant, and therefore they're having to team up now. I don't. I'm also not one that believes in having weak labor representation. That's not a good outcome. You always want to work with strong but credible unions. What we have is because companies have changed, and you would remember just earlier I spoke about shared value. The days of shareholder primacy has changed to stakeholder capitalism, and it's a much better model in today's terms, um, and therefore employees and other stakeholders are very seriously considered in the way we allocate capital and distribute profits and value. And of course, it's the right thing. You're mining a natural resource. Yes, you have made investments, but it's a natural resource. And therefore, employees are much better looked after by companies than they used to be in the past. They were just really seen as a source of labor. Today, they are seen as important stakeholders, and we work very hard. And not just Sibanye Stillwater, all well-run companies will consider their employees and work to win the hearts and minds of their employees. And of course, that starts making unions and organized labor less relevant in this environment. Now, you also have to distinguish between, let's call it regional or shaft level representation, where we actually have very good relationships. But strikes are orchestrated not by that level of labor representation. They're orchestrated by national representation who have completely different agendas. In my view, they see unions as a mechanism to, further political aims, other agendas which I don't fully understand, and therefore the teaming up of two unions is not surprising. But I think we will continue to win the hearts and minds of our employees and make sure they shared value in a fair way, still look after our shareholders, and unions must do what they got to do. We'll do what we got to do.
That's one of the challenges. Another one of the challenges in South Africa, before we look at your global operations, is the power situation. Having a conversation a month ago with the chief economist of Renaissance, who's done a huge amount of research into what gives or what adds value to economies. He put it down to three things. One of them, perhaps the most critical of them, being abundant power. Now, you've had your boxing matches with Gwede Mantashe. I recall, I think it was a year ago that we spoke, perhaps even 2 years ago, where you were wanting to put in a 50 megawatt plant and he turned you down. Now that the minimum of 100 megawatt is there, and indeed it appears as though you can put any plant you want to, any power plant you want to, does that change the outlook at all for Sibanye?
Um, Listen, we are in a better environment to become less dependent on Eskom, if I can put it that way. But there is still a lot of red tape. There are still approvals that are required. But the crisis has certainly created an environment where there's an attempt to fast track these issues. We have built up our model of renewable energy, um, and we are planning 550 megawatts of renewable energy, a combination of a few photovoltaic plants, wind, and so on. The other driver that has changed, not since we've spoken, but has become, let's say, uh, more important is decarbonization. Um, I think I may have mentioned on one of our discussions that you're not going to sell products if you've got a bad carbon footprint. That is happening. and therefore um, our energy needs are being driven both by, let's say, being less dependent on Eskom, and of course decarbonizing our footprint. The problem, Alec, is these things are not going to provide solutions this year or even next year. We within a few years, I think the interventions by various companies will provide a bit of flexibility for Eskom. But we really need to find solutions for the next few years, because the power issues, as you referred to the Economist, really hurts. I didn't want to say that the first part of our year was disappointing, not only because of strikes, but because of load shedding and a few other things.
Yeah, load shedding, living in Johannesburg, where it's currently in our area, Bryanston, 3 times a day. It's extraordinary what a dampener that puts onto the national mood. But if you now go internationally and you have a look at the acquisition you made of Stillwater in the United States, and again, it feels like just the other day, but it was 5 years ago, more than 5 years ago. You paid $2.2 billion. Many people thought you were off your head. Have you got that money back yet?
Yeah, absolutely. And listen, we haven't had it easy at Stillwater, but I am over the moon with the acquisition. We bet the farm on
Hmm.
that acquisition. You're right; it cost 2.2. There was about $400 million of cash in the company. So we had to raise about 2.6 in terms of a bridge to take it out. It was bigger than our own market capitalization at the time. Um, but despite let's call it the challenges we've had, and they're not material things, but they are challenges. We've paid that for that acquisition in just under 5 years. There's still 30 years of life. We, you know, we've recovered the 2.6 or 2.7 billion dollars that we laid out for it, and we can see about another $3 billion of value over that period. Bringing it to a net present value. So wonderful acquisition. What it's got so many other benefits other than the financial ones I've mentioned. It's positioned us in an ecosystem where we are recognized as providing solutions to North America for their decarbonization and electrification of automobiles. It's established very good relationships with companies like Ford and GM and Fiat Chrysler, which is now Stellantis. So it really helped the next phase of what we see as growth in the battery metals.
Were you lucky, or was this just real brilliance and genius?
Yeah, no, listen, I have to say we were not lucky. Um, w- and many of my shareholders have said you were saved by the price, and I say to him, listen, we weren't saved by the price. That was our risk mitigation that we presented to our board, and we made it very clear at the time that we paid full value for those assets, with upside on in two areas. The one is the price. We negotiated the acquisition at $700 an ounce, and then the Blitz project, which has been our challenge, was not really valued by the market because it was done off a pre-feasibility study by the previous owners. We took that on, risks and all, but those were our entry into PGMs, not just into Stillwater, was done with a view that supply would be constrained because of a lack of capital investment in the sector, and of course, increasing demand, especially in gasoline engines, especially after the Volkswagen saga. So no, we weren't saved by the price. That was factored in as part of the risk mitigation of doing what we did. It was touch and go, But I have to give credit to my team for developing the scenarios and seeing the opportunity and having created such value.
It's extraordinary if you go back 5 years as a time traveler, and at the time to have done what you did must have given you a lot of butterflies, but to have it all repaid within less than 5 years is extraordinary and positioned now. And here's a big question, Neal. The Ukrainian invasion by Russia, Russia being such a big player in palladium and platinum, and you now also a big player in palladium and platinum through palladium through Stillwater and the platinum here in South Africa. How is this all going to work out for you? Because we've seen huge increases in the coal price, for instance, as a result of what that invasion has done to the energy equation. What about platinum palladium?
Yeah, so palladium is the big is well, let's say Norilsk Nickel is the biggest palladium producer in the world, um, but
And
it's a
that's Russian.
byproduct. Yeah, and they Russian, and it's a byproduct to nickel production. We are the biggest primary producer of palladium as a primary product, but they do produce more palladium than us. But what we have seen is a tightening. Obviously, sanctions on Russia, both in terms of equipment and, of course, uh, buyers of palladium and platinum doing much like many of the companies have done with other commodities, not willing to buy Russian commodities. So you've seen a bit of a reorganization of supply chains. Um, and of course, palladium has held up well. There was a lot of speculation in the beginning, which drove palladium prices higher. I think now that it's settled down, we're seeing a tightening in the market, and I do think we could be beneficiaries of that unfortunate event in the short term. But it's also driven demand negatively, and that was my biggest concern when it first happened, and I did speak publicly about it, just drawing attention to the fact that we were already in an inflationary environment globally. And of course, oil prices, gas prices, food prices, due to wheat, and so on, were going to rise dramatically. And of course, interest rates rising means consumers have less to spend across the world on luxury products. And we produce metals for luxury products generally. So demand was going to fall off, and that's what you've seen. Plus, you've seen this move into electric vehicles, which has caused a drop off in gasoline vehicles. So although palladium has held firm, and I think it'll get even firmer, I think demand is being negatively affected, and we're moving into a bit of a recession for probably another year, maybe even 2 years.
Our half year has flown by, our half hour has flown by very quickly. And just to close off with, looking at the interim results, which were disappointing, but that is only, sorry, that's only, well, 6 months in 10 years, if we look at it from the life of Sibanye. When you look forward, is this a blip? You had the problems with flooding in North America with Stillwater. You had the power issues and the labor relations or the strike issues here. Are you seeing this as a blip, or are you seeing that there are going to be significant challenges ahead? And I guess it's really a message to shareholders from the CEO.
Yeah, no, I see this. Well, first of all, let me say that we came off record profits, so the results seem worse than they really are. But listen, I'm the first one to acknowledge there was underperformance in the PGM division of about 8%. The strike had the negative impact. The flooding in Montana took us out for 7 weeks. That was a major rainfall event, and so on. But no, we definitely have a much better 6 months in front of us. Of course, I worry a lot about South Africa, and we're sitting on a time bomb due to unemployment and a lack of growth and so on. But the company has been positioning for a recessionary phase where we've strengthened our balance sheet. We're sitting on a lot of cash. We still paid good dividends. This was still our third best financial performance despite the operating issues. So yes, it is a blip, um, but we well positioned. A thing like a strike, you can point fingers at management because it does reflect bad labor relations, but we also don't pay for peace. We will stand our ground for sustainability and making sure we treat all stakeholders fairly. We've still got a wage negotiation in front of us in our PGM division, which could create some volatility. But the gold positioning was actually designed to ensure that the message is clear that don't bully us. We will stand our ground. We can. We've got strong balance sheet. We've got a diversified company, and hopefully that there won't be industrial action. Let's see.
Neal Froneman is the Chief Executive of Sibanye Stillwater, and I'm Alec Hogg from BizNews.com.